For so many of us, the dream of a secure, comfortable retirement is what we work our whole lives for. But what happens when that dream becomes a target? Today, we're going to pull back the curtain on how a really sophisticated scheme turned that dream into an absolute nightmare for thousands of people. Let's get into it. Just look at this number, 6,000. That's roughly how many investors were caught up in the collapse of just one fund, the First Guardian Master Fund. We're talking about 6,000 people, many of whom poured their entire retirement nest egg into what they thought was a sure thing. So to really understand how this all went down, we're going to break it into 4 parts. First, we'll look at the bait, how they hooked people in. Then the switch, which reveals the incredibly risky fund they were really sold. After that, we'll cover the fallout, the collapse, and the huge investigation that followed. And finally, the most important part, the shield, which is all about how you can protect your own savings. So you've got to ask, how did so many different people end up in the exact same risky investment? Well, this wasn't an accident. It was a well-oiled machine, a multi-step process designed specifically to funnel money away from safe, mainstream retirement funds and straight into First Guardian. It usually started with a cold call or an unexpected email from a marketing firm. These so-called lead generators would then pass people on to a network of financial advisors. Now, here's the really crucial part. The advice was almost always identical. You need to set up a self-managed super fund, an SMSF, and then, you guessed it, transfer all of your retirement savings into one specific investment, the First Guardian Master Fund. This pipeline just funneled thousands of people right into the same trap. So, what exactly is an SMSF? Well, it's a private retirement fund that you and you alone manage. The big appeal is having total control over where your money goes. But, and this is a huge but, with all that control comes all the risk. And for the people behind this scheme, getting investors to set up an SMSF was the golden key. It unlocked their life savings, moving it out of highly regulated, professionally managed funds and into a private one, where it could be pushed into an investment that the big funds would never be allowed to touch. Okay, so the investors were in. They'd taken the leap. But what exactly did they leap into? This is where the switch happens, where the gap between the slick sales pitch and the cold, hard reality becomes a canyon. On one hand, people were sold a promise. They were promised security, great returns, a safe place for their retirement money. But the reality, it was the complete opposite. It was an unlicensed, high-risk scheme. And that word unlicensed, that's everything. It means the fund was operating in the shadows, totally outside of the normal checks, balances, and protections that are there to keep your money safe. And look, this isn't just my opinion. Australia's corporate watchdog, ASIC, put it very bluntly in their court documents. They said investors were likely misled about the safety of their money and the returns they were told to expect. That word, misled, that's the heart of this entire thing. It wasn't a mistake, it was a deception. Of course, a house of cards like this was never going to stand forever. And when it finally collapsed, it triggered a massive and incredibly complex response from the regulators, which really showed just how big this disaster was. And man, things unraveled fast. In May of 2024, the fund's operator suddenly froze all withdrawals. Just like that, everyone's money was trapped. By early the next year, ASIC was on the scene, freezing the assets of the people involved. By April, the whole thing was forced into liquidation. And then, in July, came the final brutal blow. The liquidators announced a substantial shortfall, which is a formal way of saying the worst fear had come true. Most people were never going to see their money again. The scale of this case is just staggering. ASIC themselves have called it one of the most complex and resource-intensive investigations they've ever done in their entire history. That just tells you how many people, how many companies, and how many layers of deception were involved here. ASIC's response was huge, and they went after every single link in this chain. They froze the personal assets of the directors and advisors. They issued travel bans so key players couldn't flee the country. They started canceling the licenses of the financial firms that pushed people into the scheme in the first place. They weren't just focused on the fund, they were going after the entire network. The story of First Guardian is a painful one, for sure, but it's also a really powerful lesson. So let's pivot to what I think is the most important part of all this, how you can build a shield to protect your own retirement savings from scams like this. So, this is the million-dollar question, isn't it? What are the warning signs? How do you tell the difference between a real opportunity and a cleverly disguised trap designed to steal your money?
All right, these red flags, and they come from official government sources like MoneySmart, are your absolute first line of defense. Be really wary of any unexpected call or email offering advice. If someone's pressuring you to act fast, that's a huge warning. Promises of guaranteed high returns, almost always a lie. And a massive red flag, especially after this story, is anyone telling you to switch to an SMSF just to invest in one specific product you've never heard of.
Beyond just spotting red flags, you gotta do your own homework. This little checklist is a great place to start. First, verify that any advisor is actually on ASIC's official register. It's easy to check online. Next, just question it. Ask point blank, is this product licensed in Australia? Then do some of your own research. Seriously, just searching the company's name with the words scam or review can tell you a lot. And hey, if crypto's involved, confirm the exchange is registered with Austrac. This quote from ASIC really nails it. The danger with unlicensed products isn't just that they're risky. It's that when things inevitably go wrong, it's so much harder to get any help. Your chances of getting your money back drop through the floor. You're pretty much on your own. You know, it all boils down to the oldest rule in the book, and it's still the best one we've got. If it sounds too good to be true, it is. Scammers will promise you the world, these massive returns with no risk. But that's just not how investing works. That imbalance is the biggest red flag there is. And that kind of leaves us with one last thing to think about. The Verse Guardian scheme worked because it played on that desire for control that an SMSF offers. I mean, the power to manage your own financial destiny, that's really tempting. But as this whole story shows, that control comes with a ton of responsibility. And in a world where scams are getting more and more sophisticated, the big question you have to ask yourself is taking on that much risk all by yourself really the right choice for your future?